well, it seems that most consumers in South Africa are relatively content with the NERSA's decision to grant Eskom a 25% tariff increase. But of course, Eskom still has to deal with a funding shortfall of around 100 billion rand. Well, at least that's what some economists say. Joining me in studio now is Kim Silberman, economist at Cadiz Securities. Kim, thank you very much for your time today.
Sure.
Looking at the 25% tariff increase that we're going to be getting as a consumer, and I know that some municipalities won't even be granting as much as 25%. In fact, they'll be granting around 18% tariff increases to consumers. Eskom is still very much in a dilemma. What is the scenario as it stands right now?
Well, the crisis for Eskom is that they've had tariffs that are too low for too long. So the tariff structure is basically primary energy, which is mainly coal, ops and maintenance, return on assets and depreciation. So the 33 cents that we've had covers primary energy and ops and maintenance. It hasn't covered ROA or depreciation, which means when it comes time to build a power station, you get price shocks and a funding crisis because you haven't had the extra tariff you're supposed to have in order to build up that financing buffer.
We're supposed to be getting a nice amount from the World Bank, and of course that's also being contested at this stage. Hopefully that comes through. But if we do get that World Bank loan, how much of a shortfall will Eskom be sitting with?
Even with the World Bank loan, Eskom faces a cash shortfall after funding of 62 billion in 2012-13. So the cash shortfall that they face, basically, even if you look at very optimistic funding scenarios, Eskom is short of cash. So at the moment, even with the 3.6 billion loan going to Medupi, it doesn't really help Kusile. The problem with Eskom's funding model is that with the return on assets that they have, they can't attract private equity investors. So with the tariff structure, what tariffs are supposed to do is they're supposed to give you a return on assets that are equal to your weighted average cost of capital. The NERSA approved a weighted average cost of capital for Eskom at 8.2%, but the allowed revenue that they were granted gives them a return on assets of way below that. So it depending on how you look at depreciation, it's either 7% or 5%. So and investors will be looking at the 5%. So at 5% return on assets, you're not going to find private equity investors coming in to invest in Kusile, which is what they need at this point, because they can't finish Kusile with the 25% tariff increase.
So in other words, if we don't get more expensive electricity here in South Africa, it's not going to basically entice the private sector to come in.
No, that's why we haven't had.
Because we're going to be seeing energy shortfall. Is this what it's going to come down to?
Well, unfortunately, things have been left quite late. So now, no matter what the tariff increases are, I mean, there's no time to build a power station to give us the right supply of electricity between now and 2013. And as things get delayed, which they have been by the 25% tariff increase, Kusile gets pushed out further and further. So instead of Kusile coming online in 2013, 2014, it's now coming in line 2014, 2015. So all that's happening really is that while we flounder and try and find financing for the power stations, we're reducing our potential GDP growth. And at some point, those tariffs have to increase to somewhere near their long-run marginal cost. And by delaying that process and reducing our potential output, we're really just increasing the real cost of those tariffs.
So at what levels should we be seeing electricity for the private sector to come in? I mean, we got that 25% tariff increase. I know Eskom was asking for as much as 45%. I mean, at what level should we be looking at right now?
Well, Eskom estimates their long-run marginal cost of electricity at between 75 and 88 cents. And that long-run marginal cost of electricity is a moving target. So that's what it is estimated at now, but it's based on coal prices, wages, and utility building costs, and those things are unlikely to go down in the future. So that 75 to 88 cents may be more like 80 to 90 cents in 3 to 5 years' time. So, but now at long run marginal cost of 75 cents, if we had tariffs at around that price, you'd see IPPs coming into the market.
And I think the ball game's also changed quite dramatically, given that the steel market is under the spotlight, and we are going to be seeing steel price increases here in South Africa and globally as well. So that's going to be a double whammy for infrastructure spend, and of course for Eskom as well, because they do require a lot of steel for these coal-fired power plants.
Yeah, I mean, their major cost is the turbines and the boilers, but obviously all infrastructure spend that the government's embarking on is going to suffer from higher steel costs, as is the private sector construction and investment. So it is going to, the steel prices are going to have an inflationary impact. And from what I can see, tariffs for electricity are going to be above inflation for quite some time, beyond the 3-year NYPD approved period. So besides that, I mean, we've had other applications to NERSA for increases from Transnet and AXA, and so there's a range of administrative costs that are looking for tariff increases.
And of course, the Reserve Bank did warn that administered prices are going to be quite a big dampener on the inflation outlook in South Africa, but they did say that we could see a low of around 4.9% in the third quarter of this year for the inflation outlook, and an average of around 5.4% next year. Do you think that scenario could change quite dramatically?
Well, I think possibly with steel it could up that scenario, but basically the scenario has come down, so they've dropped their inflation expectations because of the strength of the rand, and that could, that's not something one can rely on.
Kim, are you also concerned that we could see, energy or power cuts once again here in South Africa if things don't go as planned? Of course, it's a very big issue right now, and you did allude to the fact that it could stymie GDP in South Africa. To what extent could we see GDP coming under pressure going forward?
Well, as I said, so for the next 3 years, we're going to face shortages, and I would say that those are going to go on for about 6 years. So it's hard to really quantify it, because you don't know how many projects are simply never going to happen because tariffs are too high, and then there's the projects that get cancelled because you have electricity going up. But yeah, overall, my view is that growth will be quite negatively affected. So we're going to feel quite a knock in terms of GDP for the next sort of 5 to 6 years.